Let's kick things off with a pretty wild number. 124. That is exactly how many years Shenandoah Telecommunications, or Shento for short, has been in continuous operation. Just think about that for a second. We're talking about a business that was founded a full year before the Wright brothers even took flight at Kitty Hawk. They've literally navigated over a century of massive technological, economic, and social upheaval.
So it really begs the question, right? How on earth does a company born before the Model T not just survive, but actively compete in today's cutthroat digital age? Because it's one thing to run a legacy copper phone network, it is an entirely different beast to try and reinvent yourself as a high-speed broadband powerhouse. And that is exactly the puzzle we're putting together today.
Welcome to The Explainer. Today we're diving deep into Shentel's Q2 2026 financial data to analyze a business that is right in the middle of a massive structural transition. We're essentially watching a classic legacy utility company right at the tipping point of becoming a next-generation fiber infrastructure play.
Here's our roadmap for the breakdown. We'll start with a century of telecom, then look at the fiber optic pivot, dig into the Q2 2026 financial results, unpack the capital expenditures and cash, and finally, look at dividends and shareholder value.
All right, let's jump into Section 1, a century of telecom.
Just look at this 124-year evolution. Back in 1902, Shentel starts out as the Farmers Mutual Telephone System, just trying to bring basic phone service to rural Virginia. But notice how they adapt. Fast forward to 1990, and they're launching the first rural cellular service in the state. By 1994, they're already rolling out internet access. And now, in 2026, their brand new fiber business has officially crossed the 50% total revenue mark. They have managed to consistently stay one step ahead of obsolescence.
Moving right along to Section 2, the fiber optic pivot.
The whole linchpin of this modern transition is a brand they call Glo Fiber. Glo Fiber is Shentel's next-generation fiber-to-the-home, multi-gigabit broadband service. It's a massive, capital-intensive push to bring crazy-fast, symmetrical internet speeds right to the front doors of homes and businesses across the Mid-Atlantic, places like Virginia, Pennsylvania, Maryland, and even out into Ohio and Kentucky.
And you know what? People are actually hungry for it. In Q2 2026, they hit a huge milestone, blowing past 100,000 Glo Fiber data customers. That is a massive 31.3% growth rate year over year. They pulled that off thanks to a record 6,200 net subscriber additions in a single quarter. In fact, in their early markets, they're seeing penetration rates of around 37.5%, which basically proves that when they build it, the customers do come.
Now, to put that 100,000 number into perspective, their ultimate target is 510,000 fiber passings by the end of 2026. If you're a bit rusty on your telecom lingo, a passing is simply the total number of homes and businesses that could connect to their network if they chose to sign up. They're sitting at about 449,000 passings right now, which means they are in the final, ultra-aggressive stretch of their physical construction phase.
Which brings us to Section 3, Q2 2026 financial results.
This is the exact moment we've been waiting for. For the very first time in the company's entire history, their fast-growing fiber segment, which includes Glo Fiber and their commercial stuff, actually eclipsed their legacy operations, making up 51% of total revenue. The torch has officially been passed. Their future is now bigger than their past. When we look at the hard numbers, the transition really does look solid. Total revenue hit $93.5 million, which is up 5.5% from last year. Adjusted EBITDA, which is our trusty gauge for core operating profitability, jumped almost 13% to $32 million, showing some really nice margin expansion. Now, yeah, they're still operating at a net loss of $7.7 million for the quarter, mostly because digging up dirt to lay fiber is wildly expensive. But crucially, that gap is narrowing, compared to the $9 million loss they took at the same time last year.
But, we've got to look at the whole board here. It's not all sunshine and rainbows. Shentel's legacy broadband and rural exchange revenues are steadily shrinking. They're bleeding traditional cable video subscribers, they're facing weaker pricing power in older data markets, and naturally, their older DSL customers are just migrating away to faster options. This legacy decay acts like a constant heavy drag on the overall growth the Glo Fiber is generating. It's basically a race between the new business growing and the old business shrinking.
Let's dig into the wallet in Section 4, Capital Expenditures in Cash.
Check out the downward trend in spending here. 2025 was the absolute peak, a whopping $296 million in net capital expenditures. But look at the 2026 estimate. It's dropping significantly, down to somewhere between 220 and 250 million. And that's happening for one simple reason. Construction is now 93% complete on their target passings. The most painful, cash-burning phase of physically laying cables into the earth is finally cooling off.
Because that heavy construction phase is wrapping up, management has laid out this three-step roadmap to finally hit positive free cash flow by 2027. Step 1, double-digit EBITDA growth as their shiny new network actually fills up with paying customers. Step 2, a sharp decline in capital intensity since the heavy digging is done. And Step 3, a declining cost of capital following a planned debt refinancing in late 2025. If all three of these gears mesh together perfectly, 2027 is the golden year they stop burning cash and actually start generating it.
And finally, Section 5, Dividends and Shareholder Value.
This is where things get really unique. Shentel has literally maintained an unbroken streak of cash dividends since at least 1960. Back then, they were handing out fractions of a single penny per share. By 2025, up to 11 cents a share. The fact that they have managed to continuously pay and even grow a dividend while simultaneously burning hundreds of millions of dollars to build a brand new fiber network is incredibly rare in the telecom space.
So, what's the big takeaway you should hold on to? We're basically looking at a rare market hybrid. On one hand, Shentel is this aggressive, capital-intensive tech infrastructure play rapidly expanding across the Mid-Atlantic. But on the exact same hand, they're a historically stable, dividend-paying value generator with over a century of deep roots. Which leaves us with the million-dollar question as we watch this inflection point play out. Will Shentel's massive high-speed fiber gamble seamlessly cross the finish line to positive free cash flow in 2027? Or is the inevitable slow decay of their legacy copper and video systems going to act like an anchor, keeping true profitability just out of reach? It is a delicate balancing act, and it's absolutely something we need to watch closely in their upcoming earnings. Thanks for hanging out with me on this explainer, and keep your eyes on the data.